The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 14th, folks, the wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that will help you to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So what's our tool for today? I say our tool for today, especially as we start to come into the Thanksgiving holiday. Can you believe it? A week from today, the markets, will be pretty quiet. Just everybody preparing for a nice big fat turkey out there. So I think as we prepare for it, we should talk about giving, sharing, and generosity. I mean, that's always been, for me, that's always been the greatest thing about Thanksgiving out there. Until all the stores started opening up on Thanksgiving, it was really one of those pure holidays out there. I say we ought to just ban all those stores opening up. Just boycott them. Don't go out there shopping. But let's talk about giving, sharing, and generosity. You know, it's better to start the discipline of generosity when the amounts are small. Think of it like this. It's easy to give 10 cents out of a dollar. It's a little bit harder when you've got to give 100,000 out of $1 million. Something to think about as the debate in the media out here and everywhere else is about raising the taxes. That's the so-called soup du jour. Think about it. Easier to give a dime out of a dollar. But how about 100,000 out of $1 million? It's giving no matter whether it's taxes or whether you're just simply giving out to folks out there. Something to think about. Now, giving, though, certainly it is better than receiving, because giving starts really the whole act of receiving. You see, nothing teaches character better than generosity out there. Giving, folks, it's always better than receiving. If you don't have the money to share, then share ideas with others. If you share a new idea, with 10 people, folks, that is a beautiful thing. They get to hear it once. You get to hear it 10 times. Sometimes you hearing it 10 times is what it's all about. We'd love you to be able to help each of us out here at TFNN. We are always in a giving mood. We're willing to give to you our best advice possible. All you need to do is just call 877-927-6648. Any of us for 9 hours, we're going to pour our hearts out to you. We're going to give. All that we really ask you to do is just spread the word. If you tell 10 people about TFNN, just imagine how large our family would get. Just be like a little bit of some rabbits out there. Now, finally, sharing, folks, it makes you bigger than you are. The more you pour out, and that's why we pour out so much here at TFNN, the more life will be able to pour back into you. Each of you do that just simply by sharing time with us each day. You know, it's that time of year, folks. Share as much as you can. Give as much as you can give, because when somebody shares, folks, everybody wins out there. Let's go take a look at this winning market that we've got. We've got the Dow futures up about 40 points right now. ES Mini up 6. NASDAQ futures up 15. The Russell up 3.5. King dollar only back 3 ticks. But when it comes to the currency market, it's really the battle between the euro and the yen out there. You got the euro getting stronger, the yen getting weaker. And, and so when you take a look at King dollar, when you take a look at the strength of the U.S. dollar, what it's really all about, folks, the U.S. dollar is nothing more than the basket of currencies out there. So you've got the euro that makes up 57.6% of the actual weighting inside the U.S. dollar index, the yen 13.6%, the pound 11.9%, the Canadian dollar 9.1%, rounded off with the Swedish krona and a little bit of Swiss franc, 4.2 and 3.6% respectively. So we're going to go take a look at we'll do that in just a moment. We'll go take a look at that yen because that thing is taken off to the moon. I don't know if there's any fiddling around going out there by the Japanese finance ministers, or maybe it's just simply, folks, you got the yen getting weaker, which would be a really good thing for the folks over in Japan, as well as any of the equities that you might be holding, like Sony or Panasonic or something like that. As we take a look at our market, so let's go take a look at the ES Mini as we do each day. We'll start off with the 30-minute chart. Got a nice little signal here coming into the 12:30 p.m. or a.m. time, I should say, 12:30 a.m. time earlier this morning when the ES Mini pulled back to the 0.786 retracement of the move up. Kind of an explosive new moon solar eclipse combo. I had a nice email from one of my clients over in Australia that saw the actual solar eclipse, said it was really a beautiful thing, said it really kind of got a little overcast and dark over in Queensland, Australia out there. And why is that important? Well, as we were talking about it yesterday, and I can't tell you why it works, folks. I'm not even going to spend time trying to figure out why it works. I just want to know that it works, just like the electricity. Just like when I came into the studio this morning, I was able to turn on the electricity and the lights, and I knew that we could be able to deliver a show to you. I just know that it works, and when we take a look at these lunar cycles out there, they just simply mark, and they have been marking almost as Johnny on the spot, almost to the day, folks, ever since really the middle of May out there. So we've been going for 5-6 months out there. You certainly want to be able to pay attention to it. It is important. It is important to understand the low that came in yesterday. If you're looking at the ES Mini, that low coming in at, what was the price point out here? No, that was actually Friday's low. The low of, well, it's really, I'd say it's Friday's low that's more important to be paying attention to on the ES Mini. That's the price point out there at $1363.50, a little hammer candle out there. You can see that the ES Mini, as it was pulling back into that 0.786 level, the high of that hammer candle actually $1367.75 at 12:30 this morning, got down to $1367.75, tagged it, and off it goes. The markets are going to move higher. They're going to crawl higher. You don't have a lot of bulls out there. Well, you've got some of us that have a little bullish rally cap on here. Whether that rally lasts for the next 4 days or maybe it moves in to next week as well, as we come into a light trading week next week. We have a shortened trading session on Friday and Wednesday, a full trading session out there. But we'll take things one day at a time. Let's go take a look at the larger picture out here. Let's go take a look at the actual daily chart. On the daily chart here of the ES Mini, nothing to totally write home about. Well, let's see here. Let me refresh my screen, make sure that I've got the proper candles, because I don't believe that I do. Why is it looking like that? I know yesterday's candle wasn't that. Well, maybe it was. Was yesterday's candle out there? How about that? Well, I apologize, folks. I don't know if I'm having a data feed problem or not. We're going to assume that I don't. Let's take a look at the daily ES Mini. And one of the things that we do know is that the daily ES Mini had made a 1-to-1 A to B equals CD down. If you want to go ahead and mark that on your chart, your A point is going to be the October 18th high, which was 1459.75. That's your A point. Your B point is the move all the way down to the low on October 30th, out at the 1393 level. Makes a retracement. Let's go measure that retracement out here. We're going to take a look at our A to B point. We're going to measure the A to B, and we're going to see how far that B to C leg retraced. What we can see is it made it all the way up almost to that 0.618, sweet 618 out there, which would be 1434. The actual ES Mini got up to a price point of $1431.75. Close enough for me in my work. Of course, you had a wide-ranging bar on the move down on the day of November 7th. What we can see here as it was completing that 1-to-1 A to B equals CD, we had a little doji candle here. That was on the 9th. What's a doji mean on the way down? Just means that the market has gotten tired out there. That's all that it means. What do we see the next trading session? Really kind of, well, you saw a little bit of a bullish engulfing candle and a little bit of a spinning top. Is this right? Yesterday's candle? Boy, I've got to make sure, because I don't think it's right out here. If it is, let's just assume that it's right out here. What this candle here from yesterday on the ES Mini shows, it shows that the bulls were certainly in control here. If you take well, I just think it's bad data, so we're going to just simply leave that candle alone. What we can see that we have been doing here is just really been traveling sideways. You know, the body of a candle, that really is the essence of price out here. And so when we take a look at the essence of price, it also has slowed down. Basically, it's kind of lost its way to the downside. Once you do that after you're making an A to B equals CD and you're coming into a lunar phase, I say that's the time for the market to turn. Let's go over into the currency market. Let's go take a look at what's really going on there. Let me find the Japanese yen U.S. dollar currency pair. We can see here in today's action trading at the top of its session. Now, what's important about this chart, a couple things. Let's go take a look at the retracement off of the low out here. We're looking at a daily chart. The low on the euro or the yen that I'm going to is July 24th out there, out at a low of 94.10, all the way up to the high that was put in here on October the 23rd. What you are going to see is that the yen did a 0.382 retracement. Got to that area on November the 9th. You tagged it again yesterday. If all this is doing is a 0.382 retracement, it says the yen wants to get much, much weaker. What will that do to the U.S. dollar? That'll make the U.S. dollar go higher. So now it's really the battle between the euro and the... this is the euro-Japanese yen currency pair. How about that? How do you like that, folks? 877-927-6648. We come back. We'll take a look at the U.S. dollar, Japanese yen. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks, as we take a peek around the markets out here. Popping to the upside here this morning, you've got Abercrombie and Fitch. Closed at 31.18, trading up healthily. I don't think that that's a word out there, but it's trading up very nicely out at $40.30 out here. Let's go see what they are reporting. They've got net sales, $1.17 billion versus $1.1 from a year ago. Their net income, $71.5 million versus $50.9. So they are being rewarded here this morning. Abercrombie and Fitch. Right behind them, you've got Apple. Apple closing out at $542.90. Trading out at $545.50. Apple going to bounce here, folks. Apple is going to be making a move to the upside. They will go ahead and bring this market higher. They certainly drag the market lower, so we'll be paying attention to the Apple chart. You've got Cisco closing out at $16.85, out with numbers last night. They really started the move. I believe they started the move in the NASDAQ futures. You had Cisco close at $16.85, trading out at $18.01. You've got Staples also out with numbers. SPLS is the ticker symbol. They closed at $11.25. They're trading out at $11.75 right now. Let's go take a look at Staples here. If I can find the net income from operations, $310 million. That was 46 cents a share out there. Where's the comparables? They don't pop out on my screen here, so we won't worry about that. Now, to the downside here in the pre-markets, you've got Mosaic Company. MOS is the ticker symbol. They're off a couple of bucks here. They closed at $50.75. They're trading down at $48.26 out here. Let's see if they were out with numbers as well. I don't show any numbers on Mosaic. Sony Corporation, though, is trading lower. So we'll take a look at Sony as it opens up here. You've got Sony closed at $10.77, trading down at $10.05. Why would we want to look at that? Well, we take a look at the Euro chart. That's what we've got here on Tiger TV. Maybe you're listening on the radio. Maybe you're listening on your mobile device at tfnn.mobi. Thank you so much for doing that. You can always catch an archive of this show on Channel 9 on Tiger TV at the homepage of TFNN.com. We're looking at the U.S. dollar Japanese yen. As you watch this chart move higher, this says that the Japanese yen is getting weaker against the U.S. dollar. That's what's putting strength inside the U.S. dollar index. You can see barely a bear around here since the move up. It's been a really explosive move up since the 1:30 session out here. It's at its session highs. Where is this going? Looks like first stop here is going to be a 100% move of a move. That's going to take you all the way back into the swing point. And we're looking at a 30-minute chart here. I'll put the daily up on my screen in a moment. This is headed to the 9:30 session on November the 2nd out there. That price, $80.62. It's at $80.29 right now. Let's put this on the daily chart. I did have the Euro Japanese yen chart up. That's what came up first. I wasn't paying attention to the ticker symbol. What the you can see on the daily chart, also going for the swing point high on November the 2nd out there. That level would be $80.67. We're coming in there with a wide-ranging bar. You don't have volume here when you're taking a look at currency pairs. That's why you really want to make sure that you understand candle patterns that are out there. This candle pattern here that's being shown here on the daily chart, this is a very, very, very bullish candle pattern. Now, it's got to close the session out here. When I say very, very, did I say very? Very bullish pattern out here. Well, this is a version of the three-river morning star out here. Instead, this happens to be the five-river, so this is a little bit adjusted. This has more bullish connotations than a three-river morning star does. And so this says that the Japanese yen wants to really make a move. What would that move be? Well, if we just simply take a look at the most recent low out here, what we would do is we'll go back really to the low from September the 13th. That price on the Japanese yen, $77.12. You're at your A point. Your B point is going to be the November 2nd high out at 80.66. C point could be nothing more than that 0.382 retracement. We'll go ahead and do it. We did it on the euro Japanese yen. Here we'll do it on the U.S. dollar Japanese yen. What we'll see is just a little bit below the 0.382 level. That says the yen, if it takes out this swing point here from November the 2nd, that the yen ought to travel not just to the 82.60 level, but make its way all the way back to 83.57. That'll take you all the way back into March 16th of 2012. That is going to put some strength in the U.S. dollar. So what's all that going to be about as far as the U.S. dollar, as far as the market's moving higher? Well, it'll have to be against about the euro. The euro also showing some strength here this morning, and the dollar getting weaker. That is why we see King Dollar right now just simply back 4 ticks. So you got to go inside the basket of currencies to understand what's going on here. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 33 points right now. S&P's up 5. Composite up 15, leading the charge on the way up. The Russell 2000 up 3 points. We got Microsoft up 13 cents. Intel up 15. Google off 48 cents. Cisco up $1.33. Apple up $1.13. And let's go back to my chart out here. We're taking a look at the S&P 500 index and the Euro Japanese yen currency pair. See, there was some karma there. There was some reason why I was supposed to pull up the Euro Japanese yen currency pair. Well, the reason is, folks, it actually has a really good correlation to the market. So it is one of those currency pairs that you want to be paying attention to as to which way it is traveling. So if you're taking a look at this chart here on TigerTV, an important chart to look at, the candlesticks that you're looking at are just simply the S&P 500. It's trading out right now at 1379.35. So it's up 4.8 points over the close from yesterday. The black line, the little black squiggly line that you're looking at, that is an overlay of the euro-US dollar currency pair. You can see from a directional standpoint, you got two different prices, so the axis, you don't pay attention to that. Just simply pay attention to the actual direction here of the currency pairs. Now, one of the reasons why I take a look at this chart here specifically is I look for divergence. I look for the market moving in one direction and the Euro-Japanese yen currency pair moving in the opposite direction. Now, finding divergence, folks, it's really helpful to identify changes in trends that are likely going to be coming out here. Well, you can see here, you've got the Euro-Yen simply exploding, moving higher. I can turn that to a bar chart. Not a bar chart, but a candlestick chart. We saw that when we were taking a look at that earlier in the first segment of the show. You can see that is moving higher. Our markets also want to move higher. It is the currency markets that actually rule the market out here. So no divergence here with regard to direction. I know it may be hard to buy into, all kinds of reasons to see the market sell or sell off out here. But the currency markets are telling the currency markets, what are they? Maybe, I don't know, 40 times the size or more of the equity markets that we have out here. So paying attention to this currency pair, very important. I'm going to go ahead. I usually keep this on the bottom of my chart and just simply a separate window out there. Just makes it a little bit easier for me to identify correlation. So I'm just going to go ahead and put that back into a little sub window down there for the next time that I take a look at this chart. Now, let's go take a look at the bond market. So we were in the currency market. Let's go see what the bond market is telling us. So if we go over to the 30-year Treasury, yesterday we pointed out on a daily basis what the bond market had done. It had made a 1-to-1 A to B equals CD. Now it broke a descending tops line here. That's very important. That was a trend that went back to the middle or end of July 25th to be specific. So you form, or not you, but the 30-year Treasury here forms an A to B equals CD. And then what's it do? Today's candle out here, a bear sash candle. We'll see how it closes, but it's giving you the candle signal that this is ready to pull back. You could actually take a trade in the TBT. I don't necessarily like the TBT, just from the standpoint, it just doesn't move that enough for my blood to boil out there. But in essence, that's what this stock chart here is telling you. You've completed the pattern. Now you're just waiting for the candle to confirm it. So bonds, when you take a look at the markets here, you've got a currency pair, set of currencies that are saying, the market ought to bounce higher. We're taking a look at bonds. Typically that's the flight to safety, if that's the way you want to think about it. I guess supposedly because, you can get your money back 30 years from now with very little interest. But what you are seeing is a bearish signal here saying that bonds want to move lower. If bonds move lower, the market also typically moves higher out there. So we've got a number of different signals. Let's go take a look at gold and silver, see what's going on in that marketplace. Not much as we move over to the gold contract. It's trading out at $17.27. That's up $2 and change. Gold certainly had a nice move, a little nice bounce out here off of the November 5th area. You can see you've got some really narrow bodies here as it made a high back in November 9th out here out at the 1739 level. What is that telling you? Really telling you that it's lost its energy to the upside here. A fourth day in a row so far with nothing more than just a narrow banded body out there. Gold is losing, and this is going to be pretty wild. If the markets are going to bounce, you've got the U.S. dollar should pull back. You've got, of course, it's only back 3 pennies here right now. That would go ahead and should put a little bit of energy in gold. So I can see gold retracing even higher, but it is losing its energy to the upside. As far as what's the next levels, you would just simply take a look at retracements in gold. The next level up, the sweet 618 area, is the 1750 mark. You've got gold trading out at 1726 right now. Let's go take a look at silver, hi-ho silver, see what silver is doing. You've got silver up 7 cents right now, out at 32.56. And as we blow this chart up here, you're going to see really the exact same thing. Now, silver here, a little bit weaker than gold, in that it's only made it to the 0.382 retracement level. Its next level up, should it be able to take that move up, would be into the $33.62 range. That would be the sweet 618 retracement off of the highs. The high out here being October 1st, out at 35.44, down to the low that was put in on November the 5th, out at $30.67, 65 cents out there. Let's go take a look at some of these stocks here that are moving in the marketplace. As we said before the open, we were taking a look at, we weren't looking at it, but we will right now. Abercrombie and Fitch, ANF is the ticker symbol, up a nice $9 and change right now. That's actually a 30% move, so that is a gap up with volume. That is just absolutely huge out here. What was the kind of guidance that they gave out there? Pretty amazing. Pretty amazing move. Let's go take a look at the move. What it's doing, it's up above a swing point here. We'll pull this back to a weekly chart in a few minutes. This is taking out the September 14th highs out here. Those highs, 39.65. September 14th marks some pretty significant highs in the marketplace overall. That had 2.2 million shares on that trading session. Today, it's already done 8 million shares, so it's taking that area out with the volume. Oh, here's what it's doing. It's coming into an area where it last broke down. So Abercrombie & Fitch going to run into some turbulence as it gets up to the price point here for May 16th, the level of $42.85. It is a window that has not been tested. So that'll be the first test. Now, it's got 13 million shares at that level. You've already got 9 million shares here in the first 11 minutes of trading. So it should most certainly get up and test that level. 42.85 doesn't have to stop there, but we'll see what it does when it gets to 42.85. That would be the first test of a resistance area. The next level for resistance on Abercrombie and Fitch would be the low of the breakdown session. That happens to be May 15th. The low there, $44.88. But this thing does have some energy in it today for sure. Whirlpool Corporation. Was Whirlpool out with numbers? WHR is their ticker symbol. As we go take a look at Whirlpool, that is trading up about 3.5%. I don't see any numbers on it, so let's go take a look at the actual stock chart, see what it is doing. It's up against some highs out here. Its most recent high, what it's trying to take out, goes back to November 11th. That has 1.6 million shares. The high there, $100.66. This thing here already 235,000 shares today, so it should have the energy to take that level out. That's already, Whirlpool's already done a 1 to 1.272, A to B equals CD. Nary a bear in sight on this chart here as it tried to make a retracement. and come back and test this sign of strength out here in Whirlpool, which happened to be October 23rd. That had 5.6 million shares out there. That's what you want to see as you're moving into highs. That area was tested. That has acted as a support level. It was tested as it was pulling back a couple days later on October 25th and the 26th. 1.2 million shares, 1.9 million shares going against 5.6. I don't think so. So where is Whirlpool headed to? Let's go and take a look at Whirlpool on a longer-term chart. Let's put this on the weekly chart. What you can see about Whirlpool, now this is a beautiful thing about going ahead and playing continuation moves. You know, when I take a look at candle signals, so all candle signals, not all. I don't know what percentage. I'm going to call it 90%. The majority, how about that? The majority, all except for two candle signals out there are reversal patterns. But what you can also be paying attention, and so when we take a look at candle signals, or we take a look at buying and selling the D point, we take a look at expansions of swing points, butterflies, Gartleys, whatever that may be, what you're doing is you're using candle signals in order to try to identify the turn. You're absolutely going to be swimming against the tide when you make those decisions. And you need to have some strategy in order to be able to do that. I teach you how to buy and sell a D point. I teach you how to identify candle signals and what they mean. Those are 2 online workshops. If you click on my name at tfnn.com, you will see you can access those 2 workshops. They include my newsletter service as well, 1 month of my newsletter service. And if you're just beginning, or if you've been trading for a while and you haven't spent time understanding either of those 2 strategies, you really should invest in yourself and do that. As we take a look at the stock of Whirlpool on a weekly basis, that black horizontal line going across here, that was an area of resistance. That was an area that was tested, really goes all the way back into December of 2010. You can see every time that Whirlpool got up into that area, that it got up there, and it pulled back as resistance. In this case here, it bounced right through that. The week of October 26, 2012, we know it did it with volume. You can take a look at the bar here on the screen. If we take a look at the weekly A to B equals CD, but you know where this is headed to? It's headed to its swing point high out here all the way back into April 2010. But let's take a look at the A to B equals CD on the weekly chart here first. And what we will see is that 1.618 is the next level of an A to B equals CD on Whirlpool. That'll take it to 109.39. As long as it's at the 109.39 level, I say it wants to go tag the swing point here. This, again, is the weekly chart. That level, 118.44, Whirlpool, a strong-looking chart out here. I had a buy-in on Whirlpool a little bit lower than where it pulled back to. I was looking for it to come all the way back to this breakout area, which was down at the 53.33 level. It only got down to 54.13. That was a big fish that got away for sure. So Whirlpool looking pretty good. I wonder what that says for the housing industry. Something to think about. Let's go take a look at what is moving to the downside out here. Stamps.com. Great service out here. I don't know if you've used it. I certainly do. Stamps.com makes it pretty convenient. However, they are getting stamped out this morning, down 10%. I don't see a reason or a news article, I should say, on Stamps.com. So let's go take a look at the equity here, see what this is doing, pull this thing back here. So Stamps.com, let me refresh my screen, make sure we have all of the live active data. Trading out at 24.63, now coming back against an area where it last broke out. That happens to be on October 26th out there. Broke out with 982,000 shares. This morning, already 265,000 shares. This is moving down. This is going to come all the way back to the breakout area, or should come all the way back to the breakout area. In fact, you would see it's more likely Stamps.com may even come below that based on the volume it has. That would be, you've got a high volume area out here, July 26th. Maybe should find some support at about the 1959 level out here. But first, it's got to make its way and close the gap. That would be, closing the gap right would be at the 21.89. That is Stamps.com out here. This level could hold, but you've got some, actually, it would be good to pay attention to see how Stamps.com actually trades today, because you've got this breakout and you have to respect these open windows. You have to respect these gaps out here. Do they always get filled? Yeah, maybe eventually, but what you can do is you can learn to trade these, folks, and it's very important to watch the candles, watch how price reacts here. We can see that it's at an area that could act as support. Volume-wise, though, suggests that it wants a lower price out there. But I would come back, and we'll do that tomorrow. I'll keep this chart out here. So tomorrow we'll, maybe somebody will remind me, we'll take a look at stamps.com. That is trading down 10%. I am gold. IAG is the ticker symbol out here. They completed the sale with, this completes the sale of the Quim Chokja project. Actually, we're going to leave that for Tom. That is trading down 15%, though. Let's go see what the actual equity is doing out there. Very poor pronunciation of that, that's for sure. That is gapping down this morning with some volume. So let's go see where this is moving down to. So far in trading today, you've got 1.8 million shares coming out of it. This does have a high volume high out here from September the 21st, 10.8 million shares. Of course, it was tested, formed a shooting star with only 4 million shares, so it was tested on lighter volume. Couldn't bust it up out there. High volume highs getting tested. This one did. In this case here, as we take a look at it, this now pulling all the way back, or should pull all the way back, to its most recent swing point, which takes you back into the July 24th level. That would be down at $10.03. Only 2 million shares down there. It's already got, more than 2 million shares? Almost 2 million shares today. 1.8 million shares. 877-927-6648. The Dow up 10. Composite up 15. Something to think about. Apple up $4 and change. Apple's going to bounce, folks. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. As we come back, the Dow up about 7 points right now, S&P up 2. We're taking a look at Sony, the ticker symbol there, SNE, trading out at $9.96, gapping down this morning out here, completing a 1-to-1 A to B equals CD. We're taking a look at a shorter term A to B equals CD. This one going back to the level here. So it's kind of an interesting stock chart. You're taking a look at some swing point highs out here, going back to September 14th. And September the 17th out here. You can see those two high volume highs out here. No volume off of the top, so that's a good thing to be paying attention to. Those highs, we're taking a look at our $13.60 and 13.54. Had 6.4 million and 5.4 million shares. Now, you've got some energy here this morning to the downside. We've only been trading for 25 minutes. It's got 3.5 million shares to the downside. But this is kind of one of these divergent trades out here because you've got the yen getting weaker, just simply from a valuation standpoint. That ought to improve Sony's chances to get back and at least test that area. So you're trading at 996. It's actually, now don't see a bullish candle signal out here just yet, but this is one that, we want to go ahead and put on our watch list out here if we're going to take a look at a trade of Sony. So we have the target here. We know the target is going to be that high volume high on the daily chart. So we're going to say 1360. So right around there. And we know right now, and it's a trade at 996 right now. I did this yesterday, had a few emails. Folks asking me to take a look at the position size calculator, walk them through that again, and I'll certainly do that during the next show, the next segment. But let's do this right now here for Sony Corp. SNE is the ticker symbol, so we're just simply going to go ahead and put that into the system, hit the search button. It'll pull up all the information. The information that we need is really what is the last 10 days movement out here, or average true range. You want to make sure that when you're trading that your stop is outside at least 1 day's average true range. In this case here on Sony, it's 24 cents. I say use the Fibonacci expansion number of that. But let's go take a look at this. We're going to complete this. This is a stock that we're trading. If we're taking a look at going along this, and I'm going to go ahead and use $10,000 as the free trading capital. So this will give us the increments of $10,000 out here. So we're going to say our entry point. Let's assume it was right now. We don't have the bullish sign out here, so do not take this trade. But I just want to take a look at the potential setup of this. So we're at 996, and the exit here, potential exit, would be the high volume high, 1360. So as we go ahead and we hit the calculate button out here, tells us that using those parameters, using only 1% risk, that we would use 26% of our total capital on one stock. I don't suggest that you do that. That's the reason that this pops up here. I suggest that what you do is you make it 10% or less of your total holdings. You don't increase your risk. You can reduce your risk. Or what you can do is you can reduce your stop out here. We're using 1.618 as the expansion. let's go ahead and just simply reduce our risk. We'll just simply use a 0.5% out here. I'll just put it to 0.5. It's still going to come to 13%. It's still going to say it's a little bit higher. But what we are looking at is potentially a reward to risk here of 9 to 1. 9 to 1, this would say your stop would be at the $9.57 mark. Of course, if we come back and we take a look at this here, 9.57, where's the 1 to 1.272? It's 9.48. Your stop would actually have to be under 9.48, in my opinion. Better wait for a little bit of a bullish sign out here, but this looks like this may be setting up to be a nice trade. Thanks so much for being here, folks. Stay tuned. The Money Masters show is coming up next. If you're out to start your day, thanks so much for joining us. I look forward to seeing you tomorrow. Remember this, folks. If you're not giving, you're not living. Live a great life, folks, and give as much as you can. Take care.